In a significant blow to one of the world's largest cryptocurrency exchanges, Coinbase has announced it may incur losses of up to $400 million due to a recent cyber attack. This incident not only raises concerns about the security of digital currencies but also highlights the growing sophistication of cyber criminals targeting the cryptocurrency sector. Coinbase disclosed that hackers gained access to a small portion of customer data, reportedly less than 1%, by exploiting vulnerabilities through payments made to contractors and employees. The compromised data included names, addresses, and email information, although critical login credentials and passwords remained secure. The attackers subsequently attempted to extort the company for $20 million to keep the breach silent. However, Coinbase firmly rejected the ransom demand, opting instead to establish a $20 million reward fund for information, leading to the arrest and conviction of the perpetrators. The announcement has had immediate repercussions, with Coinbase share price dropping by 4.1%. This timing is particularly unfortunate as it comes just days before the firm is set to join the prestigious S&P 500 index, a landmark event that underscores the growing acceptance and integration of cryptocurrency into mainstream finance. As noted by Nick Jones, founder of the crypto firm Zumo, security remains a challenge for the crypto industry despite its growing mainstream acceptance. He added that as the sector expands, it inevitably attracts more sophisticated attacks from malicious actors. In an official statement, Coinbase emphasized their commitment to customer safety, stating, "We will reimburse customers who were tricked into sending funds to the attacker." The company is also cooperating with law enforcement to pursue the strictest penalties against those involved in the breach. In light of the incident, Coinbase has advised its customers to remain vigilant against potential scams, reiterating that the firm will never request sensitive information such as passwords or two-factor authentication codes. The ramifications of this attack extend beyond Coinbase itself, reflecting a broader trend of increasing cyber theft within the cryptocurrency market. Research firm Chainalysis reported that funds stolen from crypto businesses reached a staggering $2.2 billion in 2024, marking the fourth consecutive year where such thefts surpassed the billion-dollar mark. This alarming statistic underscores the urgent need for enhanced security measures across the industry as cyber threats continue to evolve. As Coinbase navigates this crisis, the cybersecurity landscape for cryptocurrency exchanges is likely to come under even greater scrutiny. With increased regulatory pressures on the horizon, as evidenced by ongoing discussions surrounding new legislative frameworks for digital currencies, exchanges may soon face stricter compliance requirements aimed at improving security standards. Looking ahead, the fallout from this cyber attack may prompt Coinbase and its peers to reassess their security protocols and customer engagement strategies. The incident serves as a stark reminder of the vulnerabilities that persist within the rapidly evolving cryptocurrency ecosystem, compelling stakeholders to prioritize robust security measures to safeguard both their businesses and their customers. As the industry grapples with these challenges, the potential for future developments in regulatory oversight and technological advancements remains an area to watch closely. In a significant move that underscores the evolving landscape of cryptocurrency regulation, Ukraine is preparing to establish a national strategic Bitcoin reserve, potentially in partnership with Binance. This initiative was confirmed by Yaroslav Zelezniak, the first deputy chairman of the Committee on Finance, Tax and Customs Policy, who indicated that legislative drafts are underway and will be submitted soon. This development follows earlier discussions in February regarding the legislative framework needed to facilitate such a reserve. Zelezniak emphasized the urgency of the bill, stating, "We will soon submit a draft law from the industry allowing the creation of crypto reserves." This initiative not only marks a bold step for Ukraine's financial strategy but also reflects a broader ambition to enhance the regulatory landscape for cryptocurrencies within the country. Supporting Ukraine's ambitions, Kirill Komayakov, head of Binance in Central and Eastern Europe, noted that while creating a Bitcoin reserve would necessitate substantial legislative changes, it could ultimately lead to clearer regulations for crypto assets in Ukraine. Komayakov remarked, "This process will not be quick,
but it will likely lead to greater clarity in the regulation of crypto assets in Ukraine.
As Ukraine navigates this ambitious path,
it is crucial to consider the backdrop of recent legislative efforts concerning virtual assets.
At the end of April, the Verkhovna Rada Committee had approved a draft law on virtual assets which was expected to proceed for further consideration. However, Zalesniak disclosed that this draft was recently withdrawn at the behest of the President's office, influenced by the National Securities and Stock Market Commission. The Commission denied any responsibility for the withdrawal, asserting that it does not have the authority to suspend the bill's consideration. This regulatory uncertainty is compounded by the current performance of Bitcoin, which has recently faced downward pressure. As of mid-May 2025, Bitcoin's price has declined, trading around $102,000 following a release of softer-than-expected inflation data from the U.S. The Producer Price Index (PPI) rose only 0.5% year-over-year, falling short of expectations. Analysts suggest that this disappointing inflation data increases the likelihood that the Federal Reserve may delay interest rate cuts, a situation that could dampen investor enthusiasm across asset classes including cryptocurrencies. Michael Saylor, executive chairman of Strategy, the largest corporate holder of Bitcoin, acknowledged the risks associated with Bitcoin's volatility. He warned that if Bitcoin were to plummet by 90% and remain at that level for several years, shareholders would suffer significantly, particularly given the company's leveraged position.
Saylor, who has championed Bitcoin as an unparalleled asset, stated the endgame is to acquire more Bitcoin. Whoever gets the most Bitcoin wins.
Yet he recognized the precarious nature of this strategy, particularly for equity holders who may face significant losses in a downturn.
Adding to the complex dynamics, investor Jim Chanos has taken an aggressive trading position, simultaneously betting against MicroStrategy while buying Bitcoin.
Chanos criticized the idea that corporate structures can mirror Bitcoin's value, calling it ridiculous.
He highlighted the disparity between MicroStrategy's stock price and its actual Bitcoin holdings, suggesting that the inflated stock price is driven more by speculation than underlying value.
As Ukraine moves forward with plans to establish a national Bitcoin reserve amidst a backdrop of regulatory uncertainty and fluctuating cryptocurrency markets, the implications for its economy and the broader crypto landscape remain to be seen. This initiative, alongside ongoing challenges in the U.S. and the corporate strategies of major players like Strategy, sets the stage for a transformative period in the world of digital currencies. Investors and regulators alike will be watching closely as these developments unfold, anticipating how they might shape the future of cryptocurrency regulation and market behavior. In a striking turn of events, the intersection of cryptocurrency and American politics has reached a fever pitch as former President Donald Trump's recent ventures raise serious ethical concerns. Following his controversial transition from crypto skeptic to a key player in the burgeoning industry, Trump's latest move, hosting a private gala dinner for top investors in his newly launched Trump cryptocurrency, has ignited a fierce debate about the potential for corruption and foreign influence in American politics. The gala, set to take place at Trump's Washington, D.C. golf club, is the culmination of a cryptocurrency contest that invited participants to invest heavily in the Trump coin, promising exclusive access to the former president as a reward. As reported by The Guardian, the top 220 investors, some of whom reportedly spent millions on the currency, received invitations to this lavish event. This development has drawn sharp criticism from ethics watchdogs and Democratic lawmakers alike, who argue that such opportunities effectively auction off access to the presidency in exchange for financial backing. Senator Richard Blumenthal of Connecticut has been vocal about these concerns, stating President Trump's financial entanglements to the Trump coin represents an unprecedented pay-to-play scheme. This sentiment is echoed by Massachusetts Senator Elizabeth Warren, who warned of a corruption scandal unfolding as Trump leverages his political position to benefit financially while in office. Critics worry that the contest's relatively unregulated nature may allow foreign investors to gain influence over U.S. policy.
An analysis of the Dollar Trump leaderboard indicated that a significant portion of the top investors used foreign crypto exchanges, raising alarms about potential foreign interference in American politics. Notably, the wallet of the leading buyer has been linked to Justin Sun, a Hong Kong-based entrepreneur previously charged with fraud by the Securities and Exchange Commission (SEC). Since Trump's election, however, investigations into Sun have been notably paused, heightening concerns over possible conflicts of interest. The Trump family's foray into the cryptocurrency space is not entirely new. Once a vocal opponent of Bitcoin, Trump pivoted dramatically after returning to the political arena, declaring his intention to transform the U.S. into the crypto capital of the planet. His administration has actively pushed for deregulation of the industry, appointing pro-crypto officials and even disbanding the Department of Justice's Cryptocurrency Fraud Investigations Unit. These actions have raised red flags about the implications of loosening regulations in a sector already notorious for scams and fraud. Simultaneously, Trump's cryptocurrency ventures have begun to reshape the landscape of political fundraising. The Dollar Trump coin, alongside other ventures like the Dollar Millennia coin and a Bitcoin mining firm operated by the Trump family, has attracted significant financial backing, signaling a shift from traditional real estate investments to the more volatile cryptocurrency market. This transition is exemplified by companies like FR8 Tech, which recently announced plans to borrow up to $20 million to invest in the Dollar Trump coin, framing it as a strategic move to influence trade policies aligned with their business interests. As the controversy unfolds, it remains to be seen how these developments will impact the regulatory landscape and the broader political climate in the United States. With lawmakers increasingly aware of the potential for corruption and foreign influence, calls for stricter regulations on cryptocurrency are likely to intensify. In the coming months, the political ramifications of Trump's crypto ventures could reshape the dynamics of American politics, especially as the 2024 presidential election approaches. The evolving narrative of Trump's financial entanglements with cryptocurrency invites scrutiny not only of his personal business dealings but also of the integrity of the political system at large. As the world watches, the intersection of cryptocurrency and politics promises to be a defining issue for the foreseeable future. Cryptocurrency markets are experiencing a notable pullback after a week of significant gains, with major players such as Bitcoin, Ethereum, and Dogecoin registering declines of more than 5% in the past 24 hours. This downturn comes as traders take profits following a robust rally that was buoyed by favorable macroeconomic indicators, igniting concerns among investors about potential overvaluation in the digital asset space. Bitcoin, the largest cryptocurrency by market capitalization, has seen its price dip to approximately $101,726.19, down 1.92%, and hovering near the critical psychological threshold of $105,000, which had briefly surpassed earlier in the week. Ethereum, the second largest token, also faced headwinds, falling 2.48% to $2,531.68, struggling to maintain above the $2,700 mark. Solana and Cardano suffered steeper losses, with Solana sliding 5.58% to $169.38 and Cardano dropping 6.1% to $0.7640. Meanwhile, Dogecoin fell 5.03% to $0.2232 according to data from CoinMarketCap. The broader cryptocurrency market's retreat reflects a recalibration among investors who are reassessing their positions ahead of significant upcoming events such as Coinbase's impending inclusion in the S&P 500 on May 19. This milestone is anticipated to attract considerable passive investment into Coinbase stock, with estimates suggesting demand could exceed $9 billion, which may ultimately bolster the cryptocurrency sector as a whole. Dr. Kirill Kretov from CoinPanel provided insight into the volatility currently plaguing the market. He noted, "We are in a highly volatile market where, despite the overall bullish sentiment, thin liquidity continues to amplify price movements. Even relatively small trading volumes can drive significant price changes.
The recent climb of the crypto fear and greed index to 74 indicates overbought conditions, which may have motivated traders to lock in profits following a sustained bullish trend spurred by favorable macroeconomic developments, including lower than expected inflation figures in the US and strong earnings from China's tech sector.
Despite the current downturn, institutional interest in cryptocurrencies remains robust. Data from blockchain analytics firm Sentiment revealed that mid-sized Bitcoin holders, those with between 10 and 10,000 BTC, have accumulated over 83,000 BTC in the past month, signaling continued confidence in the asset's long-term value. Kritoff elaborated on market dynamics, stating, in the current environment, price moves of up to 10% are well within normal volatility. And anything below 5% can often be considered just market noise.
Technical analysis suggests that Bitcoin has found support at the $100,000 level, which is critical for sustaining upward momentum. Analysts note that if this level holds, it could provide a launchpad for further gains. However, if it fails, the next significant support zone is identified between $90,000 and $92,000, corresponding to previous lows. A decisive break below $75,000 would indicate a shift towards bearish sentiment, raising alarm bells for investors. As the cryptocurrency market grapples with these fluctuations, the outlook for Bitcoin remains cautiously optimistic. Predictions for the end of 2025 suggest Bitcoin could reach between $120,000 to $200,000, with even more bullish projections extending to $1.2 million by 2030 based on continued institutional adoption and mainstream acceptance of cryptocurrencies.
Looking ahead, the inclusion of Coinbase in the S&P 500 could mark a pivotal moment for the cryptocurrency industry, potentially paving the way for increased institutional investment and broader acceptance of digital assets. As these developments unfold, traders and investors alike will be closely monitoring market conditions, seeking to capitalize on opportunities while navigating the inherent volatility of the cryptocurrency landscape. In recent days, the cryptocurrency market has experienced a notable downturn, prompting questions about the sustainability of the recent rally that saw major coins like Bitcoin and Ethereum soar to impressive heights. After hitting 3-month highs, Bitcoin and other leading cryptocurrencies such as Dogecoin, Cardano, and Solana have seen significant price corrections, with many traders opting to secure profits following a week of bullish momentum driven by favorable macroeconomic developments. Bitcoin, the largest cryptocurrency by market capitalization, fell 1.92% to $101,726.19, while Ethereum dropped 2.48% to $2,531.68, struggling to maintain its position above the critical $2,700 threshold. Other coins faced even steeper declines, with Solana down 5.58% to $169.38, Cardano dropping 6.1% to $0.7640, and Dogecoin slipping 5.03% to $0.2232. This sell-off comes as the broader digital asset market re-evaluates its positions ahead of significant upcoming events, notably Coinbase's planned inclusion in the S&P 500 on May 19, which is expected to attract substantial institutional investment. The recent price pullback is largely attributed to profit-taking among traders who were capitalizing on the gains made during a period of increased optimism fueled by lower-than-expected U.S. inflation data and buoyant earnings reports from China's technology sector. The recent U.S.-China trade agreement has further bolstered global risk assets, creating a conducive environment for cryptocurrencies to thrive. Dr. Kirill Kritoff from CoinPanel noted, "We are in a highly volatile market where, despite the overall bullish sentiment, thin liquidity continues to amplify price movements. Even relatively small trading volumes can drive significant price changes." Market sentiment indicators, including the Crypto Fear and Greed Index, which climbed to 74, suggest that the market is entering overbought territory. This has likely spurred traders to lock in profits, resulting in the current downward trend. Price moves of up to 10% are well within normal volatility, Kritoff added, indicating that while the market may be experiencing a corrective phase, this is not necessarily a sign of long-term bearish sentiment. Despite the present decline, institutional interest remains strong.
Data from Sentiment indicates that wallets holding between 10 and 10,000 BTC have accumulated over 83,000 BTC in the past month, showcasing a robust confidence in Bitcoin's long-term value.
This accumulation trend suggests that larger investors are positioning themselves for future growth,
which could support a resurgence in prices.
The upcoming inclusion of Coinbase in the S&P 500 is another critical factor to watch.
Analysts predict that this milestone could generate over $9 billion in passive fund flows into Coinbase stock. History tells us that index inclusion tends to act as a short-term catalyst, remarked a spokesperson from QCP Capital, emphasizing the potential for a renewed rally in digital assets as institutional capital flows into the market. On the technical front, Bitcoin's price has shown resilience at the psychological $100,000 level, with analysts identifying it as a significant support point. If this level fails to hold, the next key support zone is at $90,000 to $92,000, explained Paul Howard, senior director at Wincent. However, as long as Bitcoin remains above these levels, many analysts consider the current price movements as healthy corrections, presenting buying opportunities for long-term investors.
Looking ahead,
predictions for Bitcoin's price in the near future remain optimistic. Various financial institutions have set ambitious targets, with Standard Chartered forecasting Bitcoin could reach $120,000 by mid-2025 and $200,000 by year-end. ARK Invest's Kathy Wood has even suggested a potential long-term price of $1.2 million by 2030, demonstrating a strong belief in the cryptocurrency's enduring value. As the cryptocurrency market navigates these fluctuations, all eyes will be on the upcoming events and economic indicators that could further influence market sentiment. The fusion of institutional interest, potential regulatory developments, and macroeconomic factors will likely play pivotal roles in shaping the trajectory of digital assets in the months to come. With Coinbase S&P 500 inclusion on the horizon, the stage is set for another potential rally, leaving many in the industry hopeful for a resurgence in cryptocurrency values.